Talk about the ETF. You guys have GK, and it seems like you guys have done decently well. Markets up to start the year. You guys have done
this year's
kind
been
of
good.
About what the market's done. What is going well there? What's not going well there? And when you look at that ETF structure, are you still excited about investing out of the ETF structure versus other types of fund structures?
Yeah, so ETFs for us is a little bit different than, let's say, like a ETF company like my friend, Gary has, or the Roundhill guys I know, and or the Global X guys we know, where, when you're building an ETF company, it's really a difficult thing actually, and not necessarily what I want to be doing. But when you run a financial services firm with $2.5 billion in assets, and you start thinking about, like, how do we scale? So we got to a point now where we got 45 employees, 12,000 clients. We got hundreds of millions a year coming in, a certain amount going out, but our net new flows are hundreds of millions a year, and so it goes into, like, how do we manage money and scale? So we use index funds and ETFs as part of our investment strategy, mostly because they're low cost strategies that work. Our basic philosophy is index plus alpha. So we very much believe the S&P 500 is a great place to invest, and investors can do great just doing that. And so we'll layer the portfolio with either one ETF or a group of ETFs that sort of look at the overall market. Now, we don't invest in oil, and we don't invest in, like, chemical companies and railroads, so we kind of try to strip out, I don't like the things we don't believe in, and we invest more in like climate and technology, and consumer. So our three main themes are climate, technology, and consumer. And so the ETF was built to be the alpha portion of the portfolio. So it's about 35 stocks right now. And the idea with it was that there are these advantages that ETFs have, which basically there's no capital gains tax, And so for an investor like me, when we bought Tesla and we put, I don't know, 6 million, 7 million in Tesla, and we made, 100 times our money, but we had sold some along the way. So we made a couple hundred million, and we ended up paying tens of millions in taxes for clients. Tens of millions of taxes. And I was like, how could we do this in a way that next time we have a big kill, it's not like we lose 30% of it, And then Noah from Advisors just calls me up and says, well, there's this thing called ETFs where Vanguard lobbied for a tax exemption, basically, that says you can trade like a 1031 transfer out of one stock into a bunch of other stocks and not have to pay capital gains tax. I said, well, that's amazing. Now I just have to find the next Tesla. So the ETF was a way for us to now build portfolios, use our investment strategy, manage more money and scale. And because we manage lots of small clients, we can't buy and sell 30 stocks in a small account. We can just drop the ETF in. And then when it goes up, we're not going to be producing capital gains out of this thing. So it's almost like ideal, right, for a growth investment. So I was like, active ETFs are a great idea. It's just a great idea. And the government looked at the tax break just recently in the last thing, and they just move on because it's Vanguard and BlackRock and State Street, and who knows how much they pay, right? So most people don't realize that you can invest in my ETF. I trade it every week, and there's no taxes, no capital gains tax. Now, we do earn income because we have dividends and dividend stocks in there. So unfortunately, it's always at the top of the market when everybody has these great ideas. Let's start an ETF at the top of the market. And I knew it was. It was just like, But then if you would have told me the Fed and the war and that Elon was going to go berserk and stock was going to go down 75%, it was a brutal year in 22. It was just a brutal year for us, In my traditional accounts, we're balanced. So we lost half as much money that we did in the ETF in 2022 because we're balanced, But in the ETF, you're only seeing that strip of alpha of stocks that we manage. So this year started, and we were well ahead of the S&P for most of the year until the correction in August. And now we've kind of pulled back in line with it. But we're heavily concentrated. So you see lots of volatility in our portfolio relative to our overall portfolios for clients. So I'm pretty happy with it because, this year has been much better. a lot of the things I invest in have had some struggles recently, like cannabis. And now we're seeing some progress in cannabis, but that was, sort of painful in 22. Gaming, video gaming, crypto, crypto was brutalized in 22. But I have every still belief in these themes, and we're out of a lot of the themes right now, but we have every intention to get back in. They're cheap, like a lot of these themes are cheap. And so, we're just having to deal with this sort of post-pandemic world where ARK has dealt with it a lot worse than we have. So originally we're like, hopefully we'll beat ARK. We're doing twice as well as ARK since we started. So that makes me happy. We could have done better in some ways, but it's always easy to do that in hindsight.
What is the difference in the investment process? Let's say for private clients with a portfolio that's kind of shielded from public scrutiny versus through the ETF. I'm assuming a huge piece of this is also like you hear noise, right? Whether it's on Twitter or the mainstream media, as people can see what you're buying, they can see what you're selling. God forbid you buy something and it goes down, or you sell something and then it goes back up, right? That there's always that kind of armchair quarterback. Do you guys have a different investment process or kind of system in place for the public ETF versus maybe things that you do in the private market because of that?
No, and I own a ton of the ETF. Like, so the idea is like I don't know, I got $500,000 in the ETF personally, and then our firm has money in the ETF because we don't want conflicts of interest. And so it's like, like I think it's a great vehicle, and I've been buying my ETF, dollar cost averaging. So I'm up on it. And, it's like, it's great because we own NVIDIA and I got $800,000 in gains on NVIDIA in the ETF that, people aren't going to have to pay taxes on. It's a wonderful thing. We've also harvested all the losses from, 22. So like, let's say there's $6 or $7 million of losses that we harvested. So if you buy my ETF today, you're getting this like embedded tax advantage, huge, because you didn't lose the money, but you get the embedded losses. So it's a super advantageous vehicle for taxes, which is wonderful. So as far as the investment process, it's the same. And being public versus private accounts and versus my own money. Remember, I own all this stuff personally. So losing money is much more painful to me than like somebody on Twitter saying I suck. You know what I mean? Like, I don't give a crap about what people say on Twitter. I do care about my clients very much so. But if you don't think clients are just as, they watch their accounts, it's like, they're not dumb. If you're not doing well, they call you up and they say, why aren't we doing well? And we try to do the best we can. Now, in years like 2022, remember, we had 2021 and 2020 and 2019. So we had clients who had massive gains from tests, massive. I mean, we had a huge run. 2019, 2020, and 21 were just massive for our firm. And our assets under management more than doubled during those 3 years. It's over $1 billion, So those clients are not unhappy, even if we had a bad year in 22. So they, our average account was probably down over 20 to 25% last year. So it was kind of in line with the market, though. Mostly because bonds did not help us, which also sucked. Bonds went down just as much as stocks, pretty much. But now this year we bounced back. We're up 17, 18% for clients, especially clients who we got last year are up nicely. And the clients that, started at the top of the market in 21 are still down or even, so, it's not ideal, but it is what it is. Now, what I tell people is I've been doing this for 29 years, 30 years. And in 2008, I lost half my money, as we were down huge. I mean, it was a disaster. And, within 2 years, we had made back all our money and rode that bull market till the next disaster, which, was 2014. So, 2001 and 2002, was really brutal for me as well. It was actually 3 years, 2000, 2001, and 2. We had 3 bad years in a row and we were down like 50%. And then in 2008, we were down over 50% at one point, and pretty much the whole system I thought would be done. And we had Bitcoin. And then 2012 was now my third worst period of time over 29 years. But, 26, 25 other years have been really good.
Yeah. What do you think about Bitcoin and cryptocurrencies? And obviously there's a lot of
I love
talk
it.
about an ETF.
Love it
There's
more than ever because everybody hates it. Okay. What people don't understand is Bitcoin's not going away. What is horrible about Bitcoin is the constant pain the industry goes through because of criminality of the players. It has nothing to do with crypto. Okay. So in my mind, Sam Bankman-Fried is the worst thing that's ever happened to Bitcoin. Okay. He's the worst thing because he goes out there, takes all these ads out, spends all this money. And from day one, I knew this guy was crooked. It was just shady. The whole thing. Taking pictures with Giselle, and I'm like, this guy. So now he's in jail. Thank God. Right. But he's put this like pall on the industry. He put all the regulators on the industry. The regulators have no idea what to do. So they're just like, boom, 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 because they got to do something. Right. And they don't I'm like, SEC, just call me. Like, I'm happy to help you with crypto regulation. It's not complicated because we do it here. Okay. Just treat it like a damn security and be done with it. It's like, just be done with it. Everybody can follow rules. If the crypto exchanges don't think they can follow the same rules I'm following because it's too costly, they're full of shit. Okay. They can follow all the same rules that I follow. I just went through an SEC audit for 6 months last year. That was the other fun part of last year, by the way. Was in the middle of a bear market getting a letter from the SEC going, we're going through your tweets and we would like to talk to you about 8 of them, I'm like 8 out of 10,000. That's not too bad, So I had to do that for 6 months, but it was fruitful. It was good. But I think the SEC tries really hard to protect investors. That's their job. Nobody's getting rich at the SEC. That's for sure.